My name is Shane Balkham and I am Client Investment Director at U Asset Management. This is the quarterly video covering the third quarter of 2024. All of our investment solutions delivered positive returns in the third quarter. This adds to our very strong returns year to date in 2024, but also more importantly, our longer term returns continue to be robust. The review of the quarter saw the hopes of the summer scuppered by weak economic data coming out of the US. This also coincided with a poorly communicated bank rate hike by the Bank of Japan, which sent economic markets into a tailspin. However, markets did quickly recover as investors realized that weaker economic data may push the Federal Reserve into a more aggressive rate hike. Not one to disappoint, the Federal Reserve did indeed cut interest rates by 0.5% in September, and also alluded to the fact 2 more rate hikes may be coming in the next 2 meetings. The quarter ended positively as we saw the People's Bank of China putting a series of measures to support both the economy and its ailing property market. The reaction of the Chinese stock market was significant, propelling it from one of the worst equity markets globally to one of the best. This also boosted emerging market equities and also commodities. I would urge you to read the Manager Spotlight, where the investment team look at emerging market equities in more detail. Our tactical asset allocation for the quarter was positive. Our overweight to UK equities, which was a strong performer, supplemented by an underperformance through continental European equities, of which we are underweight. This was partially offset by our overweight in Japanese equities, which was a slight negative performer for the quarter. Within the equity component, it was notable that after a prolonged period of large AI technology companies leading markets higher, that the market broadened out and cheap value stocks were certainly back in favour this quarter. Conversely, those managers focused more on high quality growth companies in their respective geographies lagged, showing the importance of having, where appropriately and where available, different investment styles within our equity component. Within the fixed income component, long-dated US Treasuries rebounded strongly. A reduction in interest rate expectations is particularly positive for long-dated bonds, and if economic data in the US shows more signs of deterioration, this position should continue to perform well going forward. The investment team's outlook remains consistent. We have a neutral position regarding the asset allocation towards equities and diversifiers within each particular risk profile. Within equities, we remain overweight to Japanese equities, and if anything, the investment team's conviction has got even stronger in this asset class. At a company level, we are seeing more and more real-life evidence of the corporate reforms taking effect across Japan. In the investment team's regular meetings with our incumbent Japanese fund managers, they are seeing lots of evidence over small and medium-sized companies changing their behaviour to drive shareholder performance and ultimately allow our fund managers to outperform the wider market. They believe this phenomenon has a long way to run. The investment team continues to remain overweight UK equities, and UK equities outperform global equities this quarter. Corporate activity remains prominent as we see corporate buyers taking advantage of the undervaluation of many high-quality UK companies. To balance the overweight in the UK and Japanese equities, the investment team are underweight European equities. The lackluster backdrop and unattractive valuations allow the investment team to allocate where they feel there is greater upside. After a period of bonds and equities being positively correlated to each other, meaning they are moving in the same direction, it was pleasing to see this quarter bonds returning to a more traditional place in the portfolio where they react differently to equities. This is really important and very helpful when constructing a globally diversified multi-asset portfolio. We are cognizant of the current geopolitical events around the world. However, our robust investment processes allow the investment team to build long-term, globally diversified multi-asset investments. That enables us to provide to our clients long-term returns without the need to overreact to short-term news. Thank you for listening.